Evelyn, a lot of the provincial governments in this country are in tough financial shape. They've got big deficits. They've got to cut spending. They're going to need to raise revenue. And I wonder what your take is on the likelihood of fairly widespread tax increases.
I think the likelihood is there, and in fact it's started already. We've seen high income surtaxes in Ontario, Nova Scotia, Quebec and BC, and it seems to be a trend that's continuing.
Seniors are a group in this country that we often think, oh, seniors are, financially struggling for some reason, but a lot of them have quite substantial financial assets, and I think they would be quite vulnerable to a tax increase. They'll be taking large amounts of money out of their registered plans. They'll be leaving behind estates. Do you advocate sort of a proactive stance where they get some tax planning now to plan their way through the tax increases to come?
Yes, and particularly as it relates to these high-income surtaxes. Most of us think, well, you know what, we're never going to have to worry about it, a tax on $500,000 plus or $150,000 plus. But in fact, that's a tax on grandma if she hasn't averaged in her registered retirement savings plans.
Now, when you say averaged in, I wonder if you could just explain what that means.
You should start earlier to generate the tax, because most people will pay less tax in their lifetime than they will at death, particularly last to die. So start at the age of 60 and give yourself a longer averaging in period, generate the tax, and then save the money in non-registered accounts.
Okay, and just to clarify in closing, when you say averaging, you mean making withdrawals from the registered plan?
That's correct.
Okay, thanks, Evelyn.
You're welcome.